Good morning this Tuesday, the 14th of January. I'm Grady Wolf, market analyst with Bell Direct. Over in the US to start the week, Wall Street closed mixed to start the new trading week as investors shifted out of tech stocks and into the industrial sector of the market. The Dow Jones rose 0.86%, the S&P 500 gained 0.16%, and the tech-heavy Nasdaq ended the day down 0.38%. Rising bond yields also pressured equities at the start of the week as investors shift to the relatively safer returns of bonds over equities when bond yields rise. In Europe overnight, markets in the region closed lower amid rising bond yields and a soaring US dollar. The STOXX 600 fell 0.55% on Monday, Germany's DAX lost 0.41%, the French CAC fell 0.3%, and in the UK the FTSE 100 ended the day down 0.3%. Across the Asia region on Monday, markets closed lower, taking lead from Wall Street on Friday and on the back of key economic data coming out of China on Monday. China's imports rose 1% in December, which significantly topped economists' expectations of a 1.5% decline, while exports jumped 10.7% year on year, which was also above the 7.3% rise markets were expecting. China's CSI index fell 0.3% on Monday though. Hong Kong's Seng lost 0.73% and South Korea's Kospi index ended the day down 1.04%. The local market started the new trading week lower, ending the day down 1.2% as negative sentiment on the rate front in the US on Friday filtered into our local market on Monday. A stronger than expected jobs report out in the US on Friday dampened hopes of a rate cut out of the Fed anytime soon, which sparked the broad sell-off in Australia yesterday. Department store giant Myer tumbled over 23% yesterday after the retailer released an inline trading update, with flat growth and challenging trading conditions persistent during the high interest rate environment. The update dragged down shares in Premier Investments too by 16%, as Premier is the largest shareholder in Myer. Meanwhile, Insignia Financial rallied 2.43% after Bain Capital moved to match its takeover bid to that of CC Capital's $4.30 per share takeover bid as the race to take over one of Australia's leading wealth providers heats up. And Novonix tumbled almost 10% on Monday after the US Department of Energy didn't permit the battery metals producer access to specific tax credits to make it eligible for an additional loan to fund its Tennessee facility. On the commodities front this morning, oil is trading 3% higher at $78.89 a barrel. Gold is down almost 1% at $2,660 an ounce, and iron ore is flat at $98.09 a ton. The Australian dollar has slightly strengthened overnight against the greenback to buy 61.57 US cents, 96.9 Japanese yen, 50.64 British pence, and 1 New Zealand dollar and 11 cents. Ahead of Tuesday's trading session on the ASX, the SPI futures are anticipating the local market will open the day up 0.45%. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the 12-month price target on Lynas Rare Earths from $7.50 to $7.70, but maintain a hold rating on the rare earths producer ahead of the release of the company's 2Q FY25 report on the 17th of January. The analyst is looking for commentary on ramp-up and production guidance across the business given weaker than anticipated rare earth prices, but increases the price target due to their blended forward EV to EBITDA picking up portions of FY26. And Trading Central has identified a bullish signal on Ramelius Resources following the formation of a pattern over a period of 22 days, which is roughly the same amount of time the share price may rise from the close of $2.18 to the range of $2.46 to $2.52, according to standard principles of technical analysis. And that's all we have time for today. Have a wonderful day and happy investing.